today with another Learn to Trade video. In today's video, we are going to finish off this three-part series within Learn to Trade, the support and resistance mini-series that I've had going on. In today's episode, we are basically going to go over trend lines and channels, how we would draw a valid trend line, what they are and how we can obviously trade with them. We kind of went over that in episode 2. And then towards the end of episode 2, we actually discussed valid trend lines and invalid trend lines. But I'm going to go into a bit more detail, show you how to naturally draw these trend lines, and I'll run through some examples as well of actually implementing everything I've showed you guys within this mini series and how we can use everything I've taught you, all the tips that I've given you, to capitalize in the markets. So jumping straight into things, when we draw these trend lines out, so when you draw a trend line, it is important that there are at least 3 taps. So what I mean by 3 taps is for a downward trend, we are wanting to connect the peaks or the highs. And for an upward trend, we are wanting to connect the lows, or some people like to call them the troughs. Now, it is very important that you do this because if, for example, we are going to draw a trend line here for this bearish move, if we drew it underneath, how are we supposed to capitalize from this? Price comes to bounce onto this or taps onto this trend line. How are we supposed to capitalize on a sell position? It's not very clear. It's not very obvious. Hence why we draw these trend lines from the highs or the peaks. And when we draw these trend lines, they need to be as natural as possible. So what I like to do is obviously start from the highest one, start from the first one, and just naturally draw it across, like so. Now that is a natural trend line. That is a valid trend line. Reason being, it's had a tap here, being number 1, a tap here, being number 2, a tap here, and then a tap here as well. So there are plenty of taps. This makes this a valid trend line. This, as you can see, is a failed breakout. So we've probably manipulated some traders here in the market. Hence why we've seen that large volume candle. Manipulating those buyers, taking out those stop losses and those orders, and then those sellers have pushed the market back down. Now, the reason why we draw the trend lines from the highs when we are looking at bearish structure is so when we get these taps, we can look to place our sell positions. So here, for example, we could place a short here, and we could have ridden the price all the way down, again here, all the way down, again here and here, all the way down. This obviously didn't quite tap, but again, you could have placed it there, ridden the price down. We are wanting to basically capitalize on the impulses, not the retracements. So in any structure, bearish or bullish, we will always see impulses followed by a retest, and then another impulse followed by a retest, and so on and so forth. So we always want to capitalize on the impulse. The impulse is the direction of the market, and it usually comes with more volume, more volatility, and those swings are often bigger. So just zooming in a little bit here, we can see these taps a little bit more clearly. So we would obviously wait for 1, 2, 3 taps, and I would look to have jumped on a trade here for a short position, which we have actually done, and we actually capitalized. This was on the 4th of March. We capitalized on a nice short. Now, when it comes to actually placing these positions, so if I just remove this, when it comes to actually placing these positions, what we are looking for is a break in the bullish structure that was generated during the retest, tapping into this. Once we see a break in that, that tells us that retest has actually come to an end and the start of the impulse is inbound. Now, just moving down time frames, looking at the 15-minute now, and really zooming in on this specific entry so we can see how price has come up in a bullish manner, creating higher highs and higher lows. Once we've had that original tap, price has come back up. It has set a lower high, so that is our first piece of confluence and our first suggestion that price could be looking to reverse, price has come down. It has set a higher low, which is fine. So this is now a protected low. We can expect in bullish structure, a new high would be made, breaking previous highs. A new higher low would also be made, coming higher than this one, not breaking this low here. So this is a protected low. We draw our line. In bullish structure, we can expect price to do something like this. So come back up, break this high here, come back down, set a higher low, and then go up to set another higher high, and price would continue like this in normal bullish structure. As we have seen, price has come down, set the low, failed to break the high, so that is another piece of confluence right there. It has then displaced, so it's then broken structure as it has come lower. Price has come lower here than it was there, so it's broken that low. So this is another piece of confluence. Price has come up, and it has continued setting this bearish structure. Price has then broken this low here that it generated. So as price has come up, again, we would move down time frames like this, and we would see how this bearishness has continued. We have seen a continuation in this bearish structure, so lower highs and lower lows. Then when price came up here to retest, once we have seen, rejection here taking place, we've seen wicks taken over, I would have set a pending order probably around here, waiting for price to break these lows that they were setting, with my stop loss above the highs that they were generating. Now, when it comes to setting our take profit, what I would have done is obviously gone back to higher time frame structure and looked at previous structural lows and where price could fall down to before potentially reversing and setting new highs. So this would have shouted out for me, this low here. So I probably would have set my take profit just above this. And as you can see, take profit would have been achieved. So we have a 16 pip stop loss, which is above a protected high. We have a take profit set above a structural low. And we have a brilliant risk to reward ratio of a 1 to 4.7. As we saw before, we did actually place a position on this. And this is all based on drawing out trend lines. Drawing out trend lines, looking at structural lows and highs, and looking for breaks of structure. It is as simple as that. Now, obviously, we can say it is simple, and I know if you don't understand how to do these things and you don't understand how to implement these things, it can seem a little tricky, but trust me, as soon as you know how to do it, it becomes second nature. So this is our first example, and this was using a trend line, a bearish trend line to be precise. Now what we're going to do is look at channels and how we can trade based off channels. So moving over to the AUD-USD pair, here we can see clear bullish structure. So we have higher highs and higher lows. That's great. So what we're going to do here is actually draw out our channel, and I'm going to show you exactly how we could have placed our positions based on the channel and actually profited from them. So the first channel line that we are going to draw is the channel resistance line. So this is the line that goes on the highs of the Forex pair. So you want to be as natural as possible with it. You don't want to be forcing it to fit. So as you can see, that was, that was a clean draw of the line. I wasn't trying to, mess around and trying to make things fit, doing this, this, and this. You want it to just be a natural sweep across. If it doesn't fit, it's not a valid trend line. You want it to be natural. So now that we've drawn the resistance line, we need to draw the support line, because a channel is basically where we can look at placing both buys and sells on the bounce. So the bounce from the resistance and the bounce from the support. So doing the support now, we want this to be natural again. Perfect. Could probably just alter that slightly. And as we can see, we've got 1, 2, 3 touches. Here we've got 1, 2, 3. This was a break, a failed break. 4, 5. So we've got a few touches there as well. That's great. So now zooming in a little bit, how could we have traded this? Well, we've got a touch here and a touch here. So that's 2, 3. So we could have looked to place a position here. We would have looked at placing a position here. But what we would have done is obviously zoomed in slightly. waited for that confirmation of a break and retest. As we can see, we've had the break, perfect. We would have waited, price has come back down. But what price has actually done is broken back through to break again. So it's not actually a break and retest as it's come back down into this area. So we would have waited again for a break and then the retest, price has come down. And as we can see, it's gone back under and it's actually retested here instead and then gone on to set bearish structure. So we wouldn't have actually placed a trade here. That's why it's extremely important that you do wait for a break, the retest, and then to start seeing bullish structure being put in. Now this would have invalidated that, but that's why for me, I always have a checklist and I always have parameters that have to be met in order for me to place a position. So this coming back into our zone, into our channel, invalidates this whole break and retest setup. So after having 3-4 taps, this is our final tap where we could have actually placed a position. What I would have done is obviously zoomed in like so, looked at the tap. So we've got a high set here. We've then had a lower high created after the tap. We've then had a break of the low. So this confirms bearishness because in bullish structure, the lows don't get broken, the highs do, and the low here has been broken. I would have waited for price to come back up to retest. Price has come back up and retested. As soon as I've seen displacement, so what I would have done is gone down time frames like so, looked for that displacement. So now looking at the 5-minute time frame, we can see a bit more of the structure that was within that higher time frame structure. So we can see here that we actually do have displacement. We have a rally, a low set, we have a high that it came up to make. Then this previous low got broken here. We had a high, another high set. This was a lower high. And then we had that break again. So we've had the break of structure here, there, where that low has been broken. Price has come back up. As soon as I've seen rejection and price coming back down, I would have looked to have entered my position. Had my stop loss above these highs. We obviously give 1 or 2 pips for spreads. So let's say 13.5 pips. So obviously now we've got our entry, we've entered into the market, we've got our stop loss above the structural high that it created within the start of this bearish structure. We've had the confirmation here, we've had the displacement, higher highs and higher lows being broken. We've then seen price come down to retest. It's shown clear bearish structure continuing. That's why we've entered. So we go back to the higher time frames now, looking at our position, and what we can do is set our take profit at the bottom of the channel, because in channels, when we draw out these channels, we can expect price to bounce and range between these 2 lines that we've drawn out. And as we can see, take profit would have been achieved. So we had a lovely 13 pip stop loss to 173 take profit. That gives us a brilliant return of a 1 to 13. Now, if you are risking 2% of your equity per trade, this is a 26% return on this one position. And we can see that this was achieved over the course of 4 days. Now that right there is just one benefit of drawing out these channels. We can look at placing those sell positions off the rejection of the resistance lines, and we can look at placing those buy positions based on the rejection off the support lines. So we could have in fact done the exact same thing, but the opposite way around here. I'm not going to go down time frames and show you again, but you could have even done it on a higher time frame like this. Had our stop loss set underneath this line. We could have entered somewhere around here after we've had that displacement on the higher time frames. And even so, we still could have profited nicely from this. This was a 1 to 5, and this is on a higher time frame structure. This is without refining our stop loss, and we've still got a brilliant 1 to 5 risk to reward ratio. And as you can see, take profit would have been achieved. So you can look at both those buy and sell opportunities within the bounces and rejections of both these lines that we've drawn out. Now, another thing that we can do is also take full advantage of when price actually breaks these 2 lines and continues in that same momentum. So here, for example, we could have actually jumped on this, and I'm going to show you exactly how we could have done that. So obviously we've seen price approach. Price is testing this area, it's come back down, and we've had the clear break here. Now what we could have done is gone down time frames, seeing how price is, consolidating, what it's doing, and this is a tip that I've told you guys previous, is it's continued to put in higher lows. Now what this is doing is actually building demand for the AUD USD pair, and eventually that is going to outweigh the supply that is waiting above this channel line that we've drawn out. And as we can see, it's blasted through and it's continued in this bullish manner. So we have a low set here, a higher low set here, a higher low set here, and a higher low set here. So we are building that momentum over and over again. These are buy orders being put in, pushing the price up, price is coming back down. Buy orders being put in, pushing the price up, coming back down. Buy orders being put in, buy orders being put in, and eventually it's blown through this channel and we have seen bullish momentum continue. Now, where would we have entered? Well, we could have gone down on time frames. So what I would have done is looked at the fractal structure and try to find those opportunities in order to jump in. So what we've seen is we've seen price break. It's come back down. It's actually broken back under. Obviously, this line isn't exact, but it has come back down and broken under in my eyes. It's come back up. It's retested. And what has happened is we've seen a continuation in this bullish manner, bullish structure. As we've seen this high get broken, the highs get broken in a bullish structure, the lows don't. I know I repeat that a lot, but it's just to help drill it into your guys' heads that, we need to understand and acknowledge both bullish and bearish structure and how to read it and how to look at it. So we have seen a break in this high that tells us that bullishness is continuing. So we've had the break here, that's brilliant. We've then had a low set. This high that was set then has also been broken by another rally going up. So what I would have done is set a pending order above this price, just slightly, somewhere here like this. So then when price actually broke this level, I would have been straight in on the trade. I would have had my stop loss below this low that it's set. And then we could have gone back up to the higher time frames and placed our take profit where we see fit. And as we can see, take profit is being achieved wherever we wanted to set it. So now that I've shown you guys, how we can take advantage of both buying and selling within the channel, and now I've shown you exactly how to take advantage of buying on breaks of the channel, I'm going to show you why I wouldn't have entered here and the previous break here. The reason why I wouldn't have placed a position based on this, and it would have been a good job as we would have had a stop loss hit, is because, as you can see, price came through bringing good volume, which was great. It had a high set here, and if you remember correctly, we want this high to be broken in order to confirm bullishness. Now what's happened is price has come back down to retest. That's great. I would have entered if price would have done this. So if price had come back down, come back up, and actually broken this to come back down to set a new higher low, and then gone on, I would have entered somewhere around here. As soon as I've seen displacement, from the retest going back bullish, I would have entered. But the reason why I didn't is because we didn't have that. What we had instead was actually doubt within bullish strength, because we have had continuous lower highs being put into the market, both here and here. Now what this is telling us is that supply is being put into the market and it is trying to push the price back down. Then what we have seen is we've seen price come up. Yes, it has broken this high, but only ever so slightly. So I would have waited for price to come back down, retest, then gone back up to clearly break this high. But we never received that. Price came back down and actually started trading within the channel that we drew out originally. So that's why I wouldn't have entered into that. I would have wanted to see nice, clear, bullish structure. Instead, we saw some doubt. We saw supply being put into the market. So that's why I avoided trading that. Now moving over to this time span, we have seen good volume being put in. We've seen a high set. Price has come down and retested. So yes, I may have looked at entering. Price has obviously played around within this area. It's actually broken this high. So I may have had a pending order set. So if we did do so, I would have had a pending order set maybe, and it would have been activated somewhere around here with my stop loss below the low of the retest. So somewhere around here, just to give a bit of room for spreads. and then I would have had to take profit, you know, where I see fit. And then obviously as price has continued, I don't continuously stare at the markets, but I do keep my eye on it. And if I am seeing price range within this area like so, again, that is bringing doubt into the market. You know, we are seeing a continuous amount of lower highs being put in. So it's actually displacing itself and breaking its own structure. So what I would have done is, as soon as we are set away from our entry by any means, so here would have been 15 pips. We have a stop loss of 15 pips. So as soon as, you know, we have received 1 RR, which we had done, I probably would have brought my stop loss forward, alleviating that risk, just as doubt has been put into the market. And as soon as I've seen price actually achieve 1 RR, I would have either taken a partial for 1%, which means that my risk is now 1% as I've closed half of my position. So I either would have got stopped out at entry, or I've taken my partial for 1% here, and then stop loss would have been activated for 1%. So the partial that I took actually outweighs the loss, keeping me at break even with this trade. So that is why it is extremely important when we do trade that we apply good risk management and we implement these things to basically alleviate as much risk as possible and maximize those profits. So over the course of this 3-part mini series, I have taught you many different strategies within support and resistance and how we can implement these things to actually profit in the markets. So I've shown you how to trade the break and retest of horizontal support and resistance lines. I've also showed you how to trade the break and retest and rejection of support and resistance trend lines, so like this. And I've also showed you how to trade both ranges and channels. And on top of that, I've shown you the 3 different market conditions. So your counter trend, your trend, and your ranging markets. Now within all of this, I have given you a few tips, which I hope you've all remembered and I hope that you use. If you don't remember the tips, I advise going back over to the other videos and just having another listen through it, making sure you jot down those tips. Now the tips I've got for you today are, when you draw these trend lines, ensure that you have got at least 3 taps of the trend line. So like this, we have 3 taps. That is what makes it valid. And tip number 2 that I have for you guys today is, when you draw these trend lines, ensure that you are drawing them naturally and you are not forcing them to fit. That is not a valid trend line and you are not going to have good success when trying to trade off them. Now, I hope you guys have enjoyed this video. If you have, please give it a like. All the support that you guys provide is very much appreciated. If you are not in our Learning Lounge group chat, I advise you join that, as we give out so much educational content, all of which will help develop you into a confident, competent trader. And if you are thinking about profiting in the markets, but you don't know how to do so, drop either me or James a message and we will talk you through some of the membership options that we have available. And if you are really wanting to take your learning and education in this field to the next level, we do actually have 2 courses and we are looking at starting a mentorship program as of June. Again, if you want more information about those, head over to the website and check that out, as the information that we provide is going to help develop you into a successful, competent trader. Now again, I just want to say a massive thank you for watching, and I'll see you guys in the next Learn to Trade video.